Nigeria's gross domestic product grew by 4.03% year-on-year in real terms in the third quarter of 2021 to sustained growth recorded over the last 4 quarters since the recession witnessed in 2020. This is according to the National Bureau of Statistics. In a statement released by the Center for the Promotion of Private Enterprise, the recent positive growth trend in the GDP could be attributed to the rebound of domestic economic activities following the realization of restrictions on economic activities, the restoration of supply chains that were disrupted at the inception of the pandemic, and the recovery of the global economy following improvements in investor sentiment, amongst others. So meanwhile, the oil sector contracted by 10.73% year-on-year in the same period. The contraction, according to NBS, is largely attributed to the decline in crude oil production. So let's make sense of this. Dr. Muda Yusuf is CEO Center for the Promotion of Private Enterprise. He joins us via the Zoom. Thank you for your time, Doctor. Well, thank you for making time out to join us on the program today.
Thank you, and good morning.
Yeah, good morning. So you of course, I know you've released a statement in response to the report. The economy grew by 4.0% in the second quarter, in the fourth quarter of 2021. Now, this is like a sustained growth to sustain the previous figure. So is it party time for Nigeria? Would you say it's time to celebrate yet?
No, certainly not. Certainly not.
And why?
But of course, we have to acknowledge that we are making some progress. We have been able to sustain the positive growth trajectory for the fourth consecutive quarter. I think that is good news. But you have to know that in all of this, there is also a strong base effect. And what I mean by base effect is that the benchmark against which we are measuring the growth was the period of recession. We are talking of 2020. Things were really bad. So when you begin to compare what you have now with what happened at that time, obviously you see a very good level of performance based on that kind of metric or parameter. But there's still a whole lot that needs to happen. There's still a whole lot around issues of productivity in the economy. There's still a whole lot around issues of competitiveness, around the macroeconomic environment, around the issue of being able to connect to global value chain and all of that. And the fact that the real sector of the economy is still struggling. From that report, the agricultural sector grew by just 1.2%. That's a very critical sector for the economy.
We'll come to that, because I was wondering when I saw the report too, what happened in the agricultural sector, because there was much effort of the government in that sector, and yet we saw, it's a low report there. A low growth witnessed in that sector. But we'll get back to that. Yeah. To the ordinary man in the street, these numbers, of course, really do not matter much. All he wants to see is whether his business or income is adding up. So how do you think this can be made to reflect in their income with regards to government policy? So maybe you should help us make sense of this.
Well, the good thing about what has happened is that the result we have seen first is a reflection of the rebound of economic activities. Economic activities are beginning to pick up compared to what we have last year. The general level of the efficacy or efficiency of the supply chains are being restored. I'm talking about domestic supply chains and the global supply chains. And of course, the mobility and connectivity within the economy has also improved. There are some of the sectors that were also on lockdown, particularly the entertainment and the hospitality sector. Those sectors are now beginning to come alive again. You can see parties, cocktails, and all of that. And these things have far-reaching implications for many small businesses. So for the small businesses, they are beginning to feel the impact that we are beginning to see some gradual normalization in economic activities as a result of some of this relaxation of the COVID measures and so on and so forth. But a lot more needs to be done, in terms of, ensuring that we have a much better business environment. Because we have the entrepreneurs, we have the people, but the major constraints is the investment climate issues. So that is where we need to work on, because productivity in the non-oil sector of the economy, which accounts for about 92.51% of the GDP, which is quite huge. But when you look at the productivity in that segment of the economy, it's still extremely low. And when productivity is low, it affects also the returns on investment. It affects even the capacity to create jobs and to sustain businesses. It even affects the capacity to generate a lot more income and taxation and all of that. So we have quite a lot to do around issues of productivity and competitiveness. And we cannot continue to also run an economy and just concentrating only on building a wall around ourselves, saying this should not come in, that should not come in, no forex for this, no forex for that. We should be focusing a lot more on how we can also connect to the global value chain. What are we putting on the table in terms of being part of the global economy? Those are the critical things, and that is the way all the economies that have made progress, that is the way they have done.
Point taken.
Look at the economic activities,
Yes, if I may come in, Doctor, I mean, point taken in that respect, but let's talk further more on the income of an individual Nigerian who is out there, salary earner. The same minimum wage is still being paid, even though they're having challenges to pay, to even pay that, what they said they will pay. That's about 30,000 naira. So the income has not changed, it's the same. So talking about the micro economic activities of an individual, so how do we capture that? How do you think the country can capture that in its fiscal policy to reflect in the pocket of ordinary Nigerian?
Well, that is a macroeconomic management issue. Because when you have galloping inflation, what it does to the average citizen is that it erodes purchasing power. Therefore, the real income, that is what the money can buy, the real income is eroded and is collapsing. So, and for many of them, their nominal incomes are not growing to make up for the erosion of the real income. So if you are talking of poverty in Nigeria, one of the biggest drivers or accelerators of poverty is inflation. And inflation issues are macroeconomic issues. So we need to look at the macroeconomic environment and see how we can tame inflation so that the citizens will not be suffering the loss of value of their income. Because that is the biggest, that is the worst thing that can happen to the poor people. Because their income, nominal incomes are not growing. So we need to look at what are the drivers of inflation. You look at the issues, how well are we managing the exchange rate environment, for instance? Why is the exchange rate depreciating so fast and so rapidly?
Well, if you took up, let me come in a bit. Talking about the exchange rate, if you recall, the CBN came up with that policy of banning the sales of forex to the BDCs. And according to CBN, in some of his reports recently, they said that policy has been paying off for them. And that, of course, is expected to be revisited at the MPC meeting today and tomorrow. So what are your expectations with regards to reviewing that policy on sales of forex to the BDC at the MPC meeting today?
Well, we have seen the difference. We know what the exchange rate was when BDCs were being allowed access. We know what the exchange rate is after that policy was taken. The result is very clear to everybody. Because in terms of reaching the grassroots and SMEs, I think the BDCs have closer access. They are closer to the grassroots. They are closer to the micro enterprises. And don't forget, we have a huge informal economy. The informal sector accounts for over 50% of this economy. How much access do they have to go through the rigorous documentations as you have in the banking system and all of that? So I'm not sure that we have achieved much by excluding the BDCs from the foreign exchange market. But the bigger issue is to ensure that we manage the foreign exchange market in a way that enlarges the scope of the market. That is most fundamental. We cannot be allocating foreign exchange administratively. It's not sustainable. It's very difficult to manage. And we have now created pockets of subsidy centers, which also creates its own problems. So we need to adopt a market-based approach. Whether you are selling to business or you are not, that is not the fundamental issue. We should move away from this administrative allocation, this administrative fixing of exchange rates, and allow a market-based approach. Once we have that, I think we have a lot more sanity in the system. Whether the businesses are involved or not, they will find their level.
Quickly, let's take a look at the report. I mean, your response to that, to the GDP released by the National Bureau of Statistics in the third quarter. I mean, your organization has done a bit of analysis of that. We're seeing the rail sector declining, performing about 59.9%. The metal also, talking about the air transport, the electricity, gas, and steel, road transport performed about 21.11%. We've seen the water transportation sector recorded about a GDP growth of 16.30% in the third quarter. This is coming from your organization. But let's look at, with all of these numbers, and with the flip side, where the oil couldn't sustain momentum in the third quarter of 2021, how do you think going forward these figures, these numbers we are seeing, this is the fourth consecutive time we're seeing the GDP rising, growing gradually. How do you think these figures can be sustained?
Well, it's to look at where we had some critical contractions in the GDP. And the biggest contraction we had was in the oil and gas sector. You know, the refining, for instance, contracted by about 48%. That's the oil refining. And the reason for that is that, yes, we are yet to see the uptick in terms of reforms to that sector. You know, the PIA, the Petroleum Industry Act, one of the biggest focus of that act is reforming the downstream oil sector, NNPC and the rest of them. So we are yet to begin to see the impact, because what has happened is that the sector is still largely dominated by the public sector. So you have bureaucrats and politicians running refineries. I know what the outcome of that is and what it has been. Of course, all the refineries have collapsed. We are using a huge chunk of our foreign reserves to be importing petroleum products.
That's all right.
So by the time we see a turnaround in terms of reforms, especially in the oil and gas sector, because you can see that the oil refining and the crude oil were one of the major sectors that contracted.
All right.
You know, as a result of all these environmental issues, policy issues, macroeconomic issues, and so on.
Okay. I think we need to leave it there. Thank you so much, Dr. Muda Yusuf is CEO Center for the Promotion of Private Enterprises. Thank you for your time. We appreciate you for coming on Business Breakfast.
Thank you very much. Thank you.